As investors, we all dream of beating the market and retiring decades earlier. The stock market strategy that has most consistently outperformed the market is value investing. There are three basic tenets of value investing: margin of safety, Mr. Market, and the business owner's perspective. Today we'll discuss margin of safety. At its heart, value investing is as simple as buying at a discount. Price and value are distinct concepts. As Warren Buffett puts it, price is what you pay, value is what you get. Most of the time, price and value are closely aligned, but from time to time, they become sharply misaligned. We all know that we're supposed to buy low and sell high, but how do we have the great fortune to find great deals? Many great deals can be found in the form of a solid company that has recently experienced bad news. To be able to buy low, you have to be a bit of a contrarian to buy when others are selling. As Warren Buffett puts it, you want to be greedy when others are fearful, and fearful when others are greedy. In the words of the lyric poet Horace, many will be restored that now are fallen, many will fall that are now held in honor. Value investors are less likely to care about what the darlings of Wall Street are doing, that is to say, those companies that are now held in honor. They are much more likely to be interested in companies that have suffered bad news. The question to ask is, among the fallen, which companies are most likely to be restored to glory? If you're going to make your own stock picks, you need a process in place to filter out the noise. Most stocks in the bargain bin belong there. So here are a few commonly followed practices that will help you to sort out the wheat from the chaff. You want to make sure that the company has a solid track record of profit. Generally, you'd like to see some increasing profits over time. Steady is better than fitful. Now, companies with uneven profits are much more dangerous. Low or no debts, so that the company is unlikely to go under when interest rates eventually rise. I'll say it again. The most important principle of value investing is the margin of safety. You need to buy stocks at a discount to their value to protect your capital. Stock valuation is not an exact science. You can't value a company to the penny. So having some cushion to your calculation is a great way to help absorb the negatives when bad news happens. To the investor willing to do their homework, opportunities abound. One of the best ways you can protect your portfolio is through diversification. I choose to diversify with multifamily real estate. Of all the classes of commercial real estate, the multifamily sector is generally the last to suffer a downturn and the first to see rents pick up. The concept of margin of safety goes hand in hand with capital preservation. If capital preservation is one of your investing goals, multifamily investing can be a great choice. One great aspect of multifamily real estate investing is the opportunity to be completely passive, just as you are with your stock portfolio. So regardless of what you do, I wish you all the best with your investments. I hope to see you on the deck of your yacht one day. Thank you, investors.